Money. Money.
I read an article talking about the obstacles of home ownership, perceived or real, and I want to go through this. There was a recent study by Fannie Mae. What do consumers know about the mortgage qualification criteria? Revealed that many consumers are either unsure or misinformed regarding the minimum requirements necessary to obtain a mortgage. So starting in 2016, if you're thinking of being a homeowner and want an opportunity to get into the market and somebody is telling you that you may not, or you're thinking that you can't, you want to make sure you're getting all your information or all your facts correct. And the best way to do that is to talk to a professional mortgage advisor to find out where you're at and what you can do. But here's what Fannie Mae's study came up with. First, down payment perceptions. Many renters have mentioned that the lack of down payment is preventing them from moving forward to purchase a home. Now, according to Fannie Mae's report, 40% of all renters don't know what the down payment requirement is. 15% think they need a 20% down, and an additional 4% think that they need a 10% down payment. Now, here's the reality. There are programs that are offered by Fannie Mae and Freddie Mac and FHA that allow you to get in with a 3% down payment through the conventional financing, 3.5% through FHA. If you're eligible for VA financing, for all of our veterans listening to the show, there are zero down opportunities for you. And the greatest thing about VA is you don't have to pay the private mortgage insurance, which I'm going to bring and talk about here in just a second. Also, if you're buying in specific areas that qualify for USDA financing, you can get in zero down as well. Now, for any of you move-up buyers that think you're falling into the jumbo arena and you feel that you need a 20% down payment, that's a really common thing, and that move-up buyers may be thinking you can actually get into jumbo financing with as low as 10% down payment. Now, according to the National Association of Realtors, the typical down payment for first-time home buyers is 6%. Now, even consumers know this. Some consumers know this, but they still feel that they might need to do a 20% down payment to avoid paying private mortgage insurance, PMI, or mortgage insurance, MI. The reality of it is you do not. You can actually, outside of VA and USDA financing, where it's a little bit different there, your standard conventional financing, you can get in with as low as a 5% down payment and not have to pay monthly mortgage insurance. Now, there is mortgage insurance required because it's an insurance that protects the bank in case of defaulting on your mortgage. So that's still required, but you can actually avoid paying it monthly by having the lender pay it for you. Now, of course, how you accomplish that, you're going to pay a premium interest rate for it. But there's another way that's my favorite way of getting into a home with a lower down payment. And to be honest with you, even if I had a 20% down payment, I wouldn't liquidate it. I would keep my money working for me in another asset class. I would minimize my investment in my home because of the tax deduction. Plus, I don't want that money stuck in there not making anything. The question is how much is it costing you to borrow it? Can you make more on that interest in another asset class? And I bet you over a longer period of time, you most likely can. So you can get in with a 5% down payment by doing a buyout of mortgage insurance, or what they call a single premium. You're paying a fee up front to avoid having to pay the monthly mortgage insurance. It doesn't affect the actual interest rate that you're paying on your mortgage. So the best way to analyze or to look at what makes most sense for you is to analyze all of the options. And looking at them side by side, you can make the best financial decision for you and your family. Now, perceptions, many renters have mentioned the lack of credit and being able to approve for a mortgage. Now, according to Fannie Mae report, 54% of all renters don't know what the credit score requirement is. 5% think that they need at least a 740 credit score or higher. Not true. Now, for conventional financing, you do your highest credit score bracket for the best rate is 740. Most consumers don't realize, and sometimes even people in the real estate arena, that your government financing is not driven by your credit score as far as rate, unless you're at a really low credit score. Then you're going to see a little additional increase in the interest rate. Now, here's the reality. Most mortgages are granted to purchase with credit scores with less than 700. According to Ellie Mae, the average credit score on a closed FHA purchase is 687, and the average credit score on all loans combined together is 722. But most lenders on FHA financing will allow you to go to 580. which is a pretty challenging credit score. Most lenders actually have overlays to that where they'll actually lend to a 620. On conventional financing, Fannie Mae, Freddie Mac, when you're doing a 5% down payment, there are actually some lenders that are lend to 620, and there's a couple mortgage insurance companies as well that will lend at a 620. Standard is closer to 660. Now, in wrapping up the money chat, I want to talk just about the PMI, or the private mortgage insurance. It's very important that your mortgage insurance, the company that you're working with, the lender, has access to all of the major mortgage insurance companies, and there's 5 of them. The reason that's important is because there are different qualifications and there's different rates. So when we're talking about credit score, you may be able to qualify to get mortgage insurance. And there's actually a couple companies out there with a 5% down that requires 680. But also the pricing of mortgage insurance. There's a couple of the mortgage insurance companies that are risk-based, which is a total different pricing than the other 3 major competitors out there in lending or offering mortgage insurance. And it's based on what your debt to income ratio is, based on your qualifying credit score. So there's a lot of factors that you could see a substantial difference in the cost of mortgage insurance. So that's important. Now, actually, I do also want to bring in debt to income ratio, or DTI. Perceptions, many renters have mentioned that they carry too much debt and would prevent them from moving forward on a home purchase, according to, again, Fannie Mae report. 59% of all renters don't know that what the DTI requirement is. 25% think that they need under 25%, and 7% think that you need under 39%. The reality is lenders are lending up. They like to see 36% debt to income ratio. That's what they like to see. Same with the secondary market, Fannie Mae, Freddie Mac. But all day long, they're lending to a 45% debt to income ratio. So it's not challenging based on debt to income ratio to get a loan. Now, a lot of consumers don't also realize that the debt to income ratio is based on your gross monthly income. That's right. Before you take your tax, or before you have your taxes taken out, they're not lending on actual take home or net. They're lending on your gross. So take 45% of your gross income, subtract out the monthly liabilities that you're paying for on a credit report, excluding rent, electricity, phone bill, all of that. Car insurance is not included. And then that will show you what lenders are lending up to. Now, a little scary here, but the reality is the government financing, FHA and VA, are actually lending easily to low 50s and sometimes even higher. So the point in this conversation from Money Chat is just to encourage you to pick up the phone, consult with a professional, and find out where you are before you make a decision that you can't do it, because we're in a very great market. Property values are still increasing, and anticipation is they will do so for 2016, and the interest rates are still at a historical low. And talk is those eventually have to be going up as well. So now's the time to get in and take a look at the conversations around rent. For those of my listeners that are renters, pretty scary out there with the anticipation of what rents are going to do. So get into the market now while you can. Any questions that you have on information that I share through Money Chat, most of you are my regular listeners know that I do mortgages for a living. So I'm here to assist in that arena if you'd like. Again, if you want any expert in any financial situation that you have questions on, I have all of the industry leaders right here that come into studio. So please call into the show at 1-855-400-1150. Again, it's 1-855-400-1150, or online at themoneyhour.com. Coming up in the Money Hour, if you are thinking of taking advantage of this market with property values increasing, there's a lot of people that are getting back into flipping your home. And so how do you do that? You want to make sure that you're talking with an expert in this arena as well. And I have in studio Rylan Tanadici with the Ryco Group right here in 1150 AM KKNW after this short break.